Welcome, ladies and gentlemen, to Commodity TV, and it's time for a new update and interview with Scott Melby, the CEO and President of Uranium Royalty Corporation. You remember Uranium Royalty, the one and only royalty company in the world for uranium. Scott, welcome and good morning.
Well, good morning, and it's great to be with you here in Zurich.
Yeah, thank you very much for taking the time. We are
Yep.
on a roadshow, and I must say, really was a great week so far.
Yep.
Uranium Royalty, a very interesting company. You set that up, I think, a good 3 years ago, together with Amia. And I must say, unbelievable what you guys have achieved. Yeah, you have physical uranium. You have 19 royalties already so far. So how satisfied are you with the year so far?
Yeah, it's been good. Obviously, all the positive news around nuclear energy and the need for new uranium mine development, translates directly into our company. You'll recall that we launched in December of 2019 on the TSX and then subsequently listed on the NASDAQ to be essentially the one and only uranium royalty and streaming company in our space. And we're now at a point where is a young company. We have 22 royalties on 19 interests. When we acquired them at less than 0.3 P to NAV, we were still coming out of a bear market, not a lot of uranium production moving forward at that time. But now things are in full swing. So we see the portfolio beginning to crystallize and show some real value with mines like Cigar Lake, McArthur River, Lance at Peninsula Mine in Wyoming, and Langer Heinrich all either in production or heading into production. So we're seeing good visibility to cash flows in the coming years.
Mm-hmm. You have already income out of those mines?
Yeah, so for example, the McArthur River royalty is a physical payment under that structure. So in the last year, I think we received about $1 million worth of physical uranium book transferred to our account. That will go up as production increases and obviously as the value of uranium increases. With Cigar Lake, we're under a net profit interest calculation where we're still working through some of the expense bucket in that calculation. But when it's kicking in the next 2 to 3 years, that'll add another $4 to $5 million just from that. And we're very excited about Cigar Lake Phase 2, which extends our exposure on that royalty asset. Langer Heinrich, we have a fixed royalty under that. It's a smaller payment, but it's nice to be getting cash in from that. And then Lance in Peninsula is a mine in Wyoming that's in the process of starting up either late this year or early next. So if we had to estimate, and there's a lot of assumptions around these forecasts, so take them as such, but we see about $10 million in annual revenue by 2027, $20 million by 2030, and $40 million by 2033 if we did nothing more. Now, of course, the company is very active looking for new royalties and streams, either existing assets that we can acquire and put into the portfolio, or become a capital provider alongside debt and equity to new mine developers. And our pipeline of business opportunities is quite large and very exciting to think about the future of the company.
Absolutely. I can imagine that because a uranium mine has a lead time, whatever now, 20 years, 25 years easily, I would say. So time to finance, and with a royalty, you can, of course, finance without dilution. So I think that's a very interesting point here. Where do you find interesting new royalties? I mean, it's easy to say all over the world, but do you have jurisdictions you are preferring? Do you see jurisdictions which are maybe opening up in the future soon?
Yeah, obviously the uranium industry we've got decades of experience in exploration, development, operations, marketing. We're scouring the earth and we're in contact with every potential miner, developer, existing operator, and just checking in with them to see, okay, what are your capital needs? Do you need 35, 50 million to get you towards production or even over the hump into production? And then we basically lay out the case for a royalty and stream as a competitive cost of capital with debt and equity. And so, we have near-term royalties, long-term royalties, medium-term. But I would say we're obviously, and investors, I think, want us to be very keenly looking for projects that can produce and cash flow in this cycle, or we'll see significant success in this cycle. Now, those are the unicorns. Everybody wants those and needs those, but we're working with a number of parties that can fit that bill, and it's in Australia, Africa, the U.S., Canada. We're really quite actively seeking out opportunities in all those regions.
Okay, super. So let's assume you find another, whatever, 5, 7 good royalty projects, I would call it. How do you finance that? Meaning, what is the financial status of the company today? And I think you also own quite a nice amount of physical uranium, and you are getting more physical, right? In the future.
Yeah, so we have over 300 million in cash and liquid assets, so that's our war chest. And by design, we parked that cash in physical uranium purchases.
Not a bad idea,
right
rising prices.
Well, it was when we started out. There was a period of time where we were going to have to wait to begin to see cash flow under the royalty. So we wanted to incentivize and reward early investors by putting that cash to work in uranium and fulfilling the uranium exposure mandate. Well, now we have 2.7 million pounds stored at Cameco's facility in Canada that we acquired at an average cost of $60. So as we crystallize new royalty and streaming deals, we'll sell uranium to buy royalty. So over time, I think it's a transitional strategy where we don't want to become sort of a third yellow cake or Sprott physical vehicle, but we are going to use those assets to the best interest to add to the royalty portfolio.
That means you are recycling your physical uranium profit into a longer term profit as a royalty.
Yeah, it's kind of funny. We're taking uranium in the drum and turning it to cash to put into uranium in the ground. But it's wonderful to have that kind of strength on the balance sheet.
Fantastic. If I'm thinking about, as a new shareholder, why should I buy your company? Will I receive a dividend in the future? And I think what is also very important, what are your operating costs? Because normally royalty companies are very lean and work with a margin of, let's say, 90% or something like that.
Yeah, no, it's a very lean structure. The Franco-Nevadas, Wheaton, Precious, Sandstorm, Royal Gold, these companies are some of the highest revenue and profits per employee of any industrial concern. So we're no different. Our small but experienced team, the overhead, the G&A is $5 million or less to run the company. So, again, the most important thing we do is the due diligence in scrubbing these potential investments on the geology, mining, engineering, and so forth. So lean structure, and that's kind of the advantage of the royalty model.
And you will pay maybe in the future also dividend?
Dividend, yeah. I mean, we're still very much in a growth mode. Young company, it really hasn't been that long that we're not a newborn, but we're probably still a teenager. So any sort of cash flows that we generate internally are going to be plowed back into growth for the time being. But eventually, every good royalty company transitions to a dividend payer. So we look forward to that day when that can come.
So given the royalties you have today, how many more can you add until you have to enlarge the company?
We really don't. I mean, that's the beauty. We don't operate the mines. We don't have the overhead and the infrastructure that operating companies have. So we could triple the size of the company with the existing staff and team that we have. So don't look for the G&A levels to go up considerably, and looking forward to getting to that cash neutral state here very quickly.
Fantastic. So we look forward then to maybe in the future a dividend payment when the growth level is a little bit going back.
Yeah, absolutely. Yeah, let's grow for now. So.
Exactly. Let's grow for now. Fantastic. Super. Well, I think things are looking great, and thank you very much. I would say with an investment in your company, we sleep quite well because there is no mining risk involved in that sense, and you are very well diversified.
Yeah. Well, an investment in URC is it has elements of a direct uranium equity investment. It has elements of the physical commodity trusts, and it has elements of the ETF with the diversification that we provide. But we think every good uranium portfolio should hold some URC UROY shares. I think we're a great vehicle to get that exposure to the nuclear thesis right now.
Absolutely. That's why I'm a shareholder too.
Good.
Scott, thank you very much. I wish you all the best. And hope to see you soon then.
Thank you.
Thank you. Yeah, ladies and gentlemen, that was Scott Melby with an update on Uranium Royalty. He is the CEO and president of the company. And it's exactly what it is. This company is a mixture of a pure uranium play, a physical uranium play, or more like an ETF because they are so well diversified. They are in the growth mode, but more and more money is flushing into the company. They have no debt also, and over $300 million liquid assets. That's exactly what we like. And to be honest, with the market cap today, you pay like, wow, what is it? Maybe $50 million for all those royalties. That is nothing, ladies and gentlemen. So if you want to have an uranium investment, which is maybe not super spectacular on the upside, because this is a royalty company, of course, but it is long-term security, growing security, really consider URC. We see also in the point and figure chart, we see a reversal formation on the upside. Our next price target is easily 5 to 5.5 Canadian dollars, and we see for the next probably 2 to 3 years easily 8.5 to 9 Canadian dollars. So great investment on the conservative side. Thanks for watching us, and bye-bye from Switzerland.